Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Stocks are fractionally higher this morning after President Trump's new 10% global tariffs went into effect earlier today. Though the White House has threatened to raise those tariffs to 15%, investors are also reacting to fresh earnings. Shares of NYSE-listed Home Depot are up more than 2% after the retailer beat top and bottom line estimates during the fourth quarter. Here's what else is on tap this hour. From the One Big Beautiful Bill Act to the evolution of artificial intelligence, the tax reporting landscape is experiencing major changes this year. NYSE-listed H&R Block CEO Curtis Campbell tells us how the firm is helping its members navigate the space. Meanwhile, earnings season is still generating plenty of headlines. Executives from NYSE-listed firm Amherst Sports and Easterly Government Properties are going to deliver their biggest takeaways and why their firms are set up for a big 2026. And we'll count you down to the opening bell at 9:30 Eastern. This morning, the Lower East Side Partnership will do the honors as the major averages look to bounce back during today's session. But we begin with the markets, as we often do here on NYSE Live. And joining me now is Achilles Larrea, founder and CEO of Larrea Wealth Management. Achilles, thank you for joining us on NYSE Live.
Ashley, thanks so much for having me back. I appreciate it.
So good to see you. So what are you going to be following most closely in today's session?
Yeah, today we're looking at consumer confidence, but we're also looking overall at the market. What are the earnings telling us? I mean, Home Depot is an important component. Home starts. We're also very interested in this point. Where is AI going at this particular point? And the expenditures. I mean, I look at Microsoft spending $50 billion in the AI space, and we want to say to ourselves, is this just part of the trend going forward in the future? Is inflation going to cut into that? Because we're seeing inflation at roughly 3.2 to 3.4% in the range. Also, high earners right now versus low earners we're starting to see a growing divide in terms of sentiment. In terms on the low income side, we're seeing sentiment being more stagflation, more persistent inflation worries. We look at inflation. Inflation's about 3.4% right now, but that doesn't really include what you're seeing at the grocery store. The affordability component keeps coming back into play, and you have to be cognizant of that, because going forward, if I'm a consumer and I'm going to make expenditures, whether it be business, life, or what have you, you want to make sure that you're doing so responsibly, strategically. But you can't do that if you're seeing double-digit increases in pricing. Now, we've seen some oil coming down in terms of gasoline pricing going down in some areas. We're seeing some of the areas of food stuff going down as well, but not a significant move to the downside at this particular point. So I'm expecting these consumer confidence numbers to come down a bit, but overall, the market is poised. If we start seeing really good earnings across the technology front, we could see that start to move on the upside. We could also start to see a sector rotation because, the Magnificent Seven has been paying a lot of dividend, return back to investors, but if we start to see a broader rally in the market, that could be a very interesting component where we're all making money in different areas and not just in the Magnificent Seven area. We also think finally is really at the end of the day, stocks are well poised. There's a lot of stocks that are highly undervalued. So we at Larrea Wealth think that stocks are going to continue to move to the upside, although it be more a muted move to the upside. So we're not going to see that big double-digit increase in certain areas that we saw last year. We're going to see a more muted 7 to 10% in those aggressive type companies. In the AI space, we really believe that this is the future in this country. And these companies that are lining themselves out, like your Microsoft, Oracles of the world, that are lining themselves up, they're thinking the long game. They're not thinking short term. And we believe that that is the right move at this time. So they will benefit long term.
All right. And the major averages are also looking to bounce back after they fell by 1% on Monday. What is currently driving sentiment?
Yeah, well, we're seeing right now, like I mentioned before, the pricing has a big component. If you're a high wage earner and you're not as sensitive to pricing as someone who's lower income, that's seeing job stagnation, that's seeing wage stagnation, that we're also seeing pricing really not moving at the grocery store. So we have to be cognizant of that. And that divide is starting to really become bigger. It wasn't, we're at historic lows in terms of sentiment versus what we saw, in just the past 4 months. So what could happen going forward is, are we going to see at 10 o'clock, are we going to see these numbers move up slightly from the January dip that we saw before? Or are they going to remain relatively flat? And we think we're going to see a little bit of an uptick in terms of confidence numbers, but we believe that it's more important that we keep monitoring what it is going forward in terms of pricing, in terms of affordability. This isn't just a buzzword. If you can't afford certain initiatives, you're not going to move in that direction. So it's very important that we, as a consumer, in terms of what we're going to be spending on, be very careful and strategic about that.
All right, and we're near the end of earnings season with NVIDIA set to report on Wednesday after the bell. What is your expectation in our last minute together?
Yeah, NVIDIA is a very interesting stock. Even with the news that Meta is going with the AMD chips and the like, I think they're really well positioned abroad. And as a whole, they're a dominator in the industry right now. And I don't see any competitors getting too close at this particular point. But let's see what happens with the earnings, because we think that there is plenty of opportunity for the stock to run up. We're high on the stock, hasn't really changed in the last 2 years, and we've made our clients a lot of money in that respect. So we believe that it's going to be a continuing trend, albeit a little bit muted. So maybe we won't see 30% this year. Maybe we won't see 100% in certain related stocks. But NVIDIA is definitely going to be a winner.
All right, thank you, Aquiles Larrea, founder and CEO of Larrea Wealth Management.
Thank you.
Coming up, taxpayers are navigating a new landscape with complex rules and the growing role of AI in the process. Curtis Campbell, the CEO of NYSE-listed H&R Block, takes us through how he's helping clients next.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. Tax season is upon us, and experts say it may be one of the most complex yet due to the One Big Beautiful Bill Act. Joining me now to share more is Curtis Campbell, CEO of H&R Block. Curtis, welcome.
Hi, Ashley. I'm happy to be with you today.
So, Curtis, what makes these changes so significant and potentially challenging when taxpayers are filing this year?
You know, this year marks a year of massive change when it comes to tax law. It's really important for consumers this year, because of so much change, to turn to a tax professional to guide them through the change. In many cases, it could impact customers up to 10% of an increase in their tax return. So it's a pretty important year.
All right, and you say that tax changes create complexity, but also opportunity. How do you balance helping clients navigate the rules while ensuring that they maximize their refunds?
You know, Ashley, this tax season brings some of the most complex and significant tax changes we've seen in several years. And many taxpayers are unsure of how these rules affect their bottom line. Here at Block, our opportunity is to turn that uncertainty into confidence. And we do that by combining human expertise with technology. Here at Block, our tax pros average 10 years of experience with us, and they're up to speed on every change. And our digital tools also help them identify credits, deductions, and planning opportunities that, in many cases, a lot of people would have otherwise missed. Ashley, here at Block, we also offer this unique service called Second Look, where we have the opportunity to review the last 3 years of a new client's prior tax returns, and we do that completely free, often finding money others may have missed. And for many clients, that's real money in their pockets. And at Block, we're committed to ensure that every one of our clients gets every dollar they deserve. Our services here at Block, they also offer clients the accuracy they need, the maximum refund that they're entitled to, and the peace of mind that comes from knowing that it was done right at the end of the day.
And what is the H&R Block experience like when you're filing taxes, whether it's online or in person?
Yeah, so we've got a couple different options. Our focus is to meet clients where they are, whether they choose to connect with us online with our DIY product, or go into one of our tax offices and connect with a pro. As we look at this season, we see incredible opportunity to provide clarity and confidence, and we're here to improve our clients' financial outcomes, no matter where they come from, what their backgrounds are, and we want to ensure that they get every dollar they deserve. As we think about the new tax changes this year, these tax changes can translate into really, really meaningful savings. And I'll give you a couple of examples, Ashley. A nurse that earns, let's say, $60,000, who may have earned $10,000 in overtime, could save almost $1,300 in their taxes this year. A server, for example, earning $42,000 with $15,000 in tips, they could see a savings of almost $2,000. And those are real savings for working families, and we're super excited to help clients take full advantage of these new rules.
And how is AI impacting the tax preparation experience for this season and beyond?
You know, Ashley, AI is an incredible enabler for our business. It allows us to deliver better experiences for our clients and for our taxpayers. AI is also embedded in many of our key features this season, including AI Tax Assist, Second Look, and our new AI-enabled Tax Pro Assistant. Over the years, over 55% of the U.S. population, they turn to tax pros seeking confidence, trust, and judgment. And our integration of AI capabilities allows us to deliver best-in-class experiences for the millions of people who select us every year.
So what are some of those use cases for the AI? What is the, how is the AI, enhancing the process?
So for clients who choose our DIY product, who run into fear, uncertainty, and doubt somewhere in the experience, they've got the ability to connect through our AI agent to ask specific questions, to gain more confidence as they go through the product by themselves. If they're engaging with our tax pros, we've also built in AI tools via agents that allow our tax pros to provide specific guidance to each one of their individual clients.
All right, and I understand H&R Block was recently named the best online tax service for 2026 by CNET. Can you share more about that honor?
We're super proud of this recognition, Ashley. So CNET named H&R Block as their best overall online tax service for 2026. And this recognition reflects our commitment to blending digital innovation with human expertise, and it validates our work to help clients get every dollar they deserve. To enable that capability, this year we've delivered several major enhancements that give us an unmatched competitive edge. So number one would be our transparent pricing that's easy to understand. Number two would be our user-friendly experience that makes filing super straightforward. Third would be our innovative AI tax assistant that I talked about, which helps clients navigate deductions and credits with confidence. And lastly, it's easy access to our tax pros through our Ask a Pro feature. And Ashley, I'd be remiss if I didn't recognize the amazing team that we have here at Block who wake up every day focused on solving for our clients. And, I believe these awards motivate us to keep raising the bar, listening to our clients and delivering the expert guidance and support they deserve.
And Curtis, what is the most direct way for someone to file their taxes using H&R Block? How can they find out more?
Well, the easiest way is for clients to visit hrblock.com. And once again, that's hrblock.com. And their clients can choose to work with a tax pro or file taxes on their own with our award-winning DIY software.
All right. Thank you, Curtis Campbell, CEO of H&R Block, for joining us on NYSE Live.
Thank you.
Coming up, NYSE listed Amer Sports just delivered its latest earnings report earlier this morning. We discuss what's in store for its lineup of brands in 2026 up next.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. NYSE listed Amer Sports, the company behind well-known sports equipment brands like Wilson and Salomon, just reported earnings for its fourth quarter this morning. Joining me now to break it all down is Andrew Page. He is the CFO of Amer Sports, and Guillaume Mezenc, CEO and President of Salomon. Welcome to the NYSE Live.
Happy to be here. Thank you.
Andrew, what should investors take away from today's report?
I think consistency. We just delivered a 27% year-over-year growth, 160 basis points bottom line margin expansion, able to get behind and invest in a up-and-coming brand. Salomon is inflecting right now, and so we're able to do what we say we're going to do. We're able to be consistent about it. We're able to get behind our hot brands and continue investing. And I think that is the power of the portfolio. That's the power of our global reach. That's the power of us being in multiple categories. So I'm really excited about how we close out 2025, and even more excited about how we set ourselves up for 2026 to have it yet another strong year.
Guillaume, Salomon surpassed the $2 billion sales mark in 2025, and Amer Sports CEO James Zhang referred to your brand as a, quote, rising star. What is fueling the momentum?
So we are at a unique moment for Salomon. For many years, we have been very strong in few niche markets, such as winter sport equipment, outdoor footwear, and trail running, where we have double-digit market share, but in markets which are not more than $3 to $6 billion worldwide. And we enter lately two new segments. One is road running, which is a $25 billion market, and the second one is sports style sneaker, which is a bit more than a $100 billion. So suddenly we just open, a very big part of opportunity for Salomon. We want to remain quite authentic, keeping, this innovation pipeline, keeping this positioning of modern mountain sports lifestyle. But of course, we are just at the beginning of kind of new journey for the company.
All right. And Andrew, how is the health of the consumer and what does their buying behavior look like now?
I can definitely speak to the health of our consumer. Our consumer continues to exemplify resilience. They continue to prioritize their health and welfare, and they continue to be discerning with regard to looking for innovative products that amplify differentiation, and that's all about our portfolio. We have a portfolio, multiple category, multiple channels. We can meet the consumer where they are in an omni-channel environment. They have continued to, again, focus on their health and welfare, but they're doing it in a discerning way. And the fact that we have pinnacle innovative products, it's really being responsive to the consumer. So like I said, they've been resilient. This has been, over the last few years, no year has looked like the prior year, but our consumer continues to display resilience through it.
All right. And Guillaume, many brands chase trends, but you say Salomon sets them. How so?
So the challenge we have today is really to remain very focused on what makes Salomon very unique, having a pipeline of innovation, proposing to consumer product with function. And, our design is really led by the function and the quality of our product. But of course, it's a new step, and we are trying also to create a new momentum with the consumer, being much more close to the cities and the urban consumer. And this is why, for example, we just hire a new creative director who will combine, the responsibility of the brand design as well as product design in order to create this type of very unique momentum and energy around the brand.
All right. And Andrew, what are you most excited about for Salomon and Amer Sports in the upcoming year?
Yeah, I mean, really, as I think about the upcoming year, there are a number of things to be excited about. Most notably, out the gate, our trends are really strong. So we exited 2025 with momentum. And as I look at the first 7 or 8 weeks of 2026, that momentum and those trends continue. The other thing that I'm excited about is that we operate in a very healthy sector. The outdoor sector is very healthy. It continues to attract more and more consumers, and we have the best products in the world in that space. And third, I love our geographic footprint and expansion. We have we operate in some of the best markets. We have a differentiated offering in Greater China. We have growing brands in the world's largest market here in the U.S. Whether it be Arc'teryx or Salomon or Wilson Tennis 360, we are primed for growth and across all of these brands. And so I'm super excited about how we're set up for 2026.
And Guillaume, in our last few moments together, what are you looking forward to this year?
Yeah, 26 will be a very exciting moment for Salomon. The first one is we will continue to develop our epicenter strategy, looking at large city where we open some store and across the world, not to name New York, LA, Paris, London, Shanghai, Tokyo, but we have also some new projects such as Miami, for example, in US. The second one is we just opened a new office in Paris. We are a French-based company close to the Alps, and now we want to extend and create, a new momentum, better connection with urban consumer, having a base in Paris. The last one is a lot about products. So we just launched the new S-Lab Phantasm 3, which is a super shoe. The shoe has been fifth at the New York Marathon in November, and it's really a new type of technology where we include aerodynamism in the way we are designing the product. And the last one, we just go out from Olympic Games, where you know that Salomon has been premium partner. So we equipped the volunteer, the 25,000 volunteer of the Olympic Games, but as well as our athletes won 34 medals in the core sport of Nordic, Alpine, and snowboard. And we feel very proud of this success. And of course, it will start a very strong 26 years for Salomon.
All right. Thank you, Andrew Page, CFO of Amer Sports, and Guillaume Mezenc, CEO and President of Salomon, for joining us on NYSE Live.
Thank you.
Thank you very much.
We'll take you to today's opening bell in just a moment, but first, the NYSE has seen plenty of exciting bell celebrations this month, including Once Upon a Farm's listing day. Since beginning trade on February 6th, shares of OFRM are up 14%. Let's take you back to the company's big day at the NYSE.
As a mom back in 2013, I didn't have the option to find any refrigerated kids' food on the market, and today I can go into almost any store in the U.S. We literally have changed the entire baby food industry.
You guys have been there since literally the very beginning, and I'm so appreciative for you. You deserve everything that happens today.
And mostly just to all of these little kids who inspire us and make us want to build a better world, and we're doing it. We're actually doing it.
16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream, and that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. In just a moment, Lower East Side Partnership will ring the opening bell to recognize its continued dedication to keeping Lower Manhattan safe. Let's go. Stocks are officially open for trade, and while President Trump's tariff policy is impacting much of the market activity so far this week, corporate earnings will impact sentiment as well. Joining me now is Christine Short, head of research at Wall Street Horizon. Christine, welcome.
Hi, thanks so much for having me.
Of course. So how can the latest tariff-related developments play out across earnings this week and next?
Yeah, so the trade war is back on, right? Just when we thought it was in the rearview mirror, a lot of companies had figured out how to deal with new trade policies. Now we see it's back on the table. As you mentioned, President Trump invoking Section 122 of the 1974 Trade Act over the weekend and raising global tariffs up to 15%. We're just starting to hear now from companies responding to that that have reported earnings this week. Just this morning, Home Depot, they said they were still sort of digesting and analyzing what this meant for them, what Section 122 and what the impacts would be. But overall, they said, look, a lot of their products are sourced domestically, so that's good for them. But for those that aren't, the tools and the materials that they have to import, a 15% tax would be difficult for them, especially if it continues beyond the 150-day window. We know we'll likely have a showdown with Congress this summer when that 150-day window is up. But if it continues beyond that time frame, they'd pull their first lever for dealing with increased tariffs, which is to make price adjustments. And so that is what they said on the call this morning, CFO Ted Decker. And again, it's not their first rodeo. They've dealt with tariff increases before, but usually the first tactic they implement is to raise prices. And that comes at a time when Home Depot is kind of making a little bit of a recovery. The numbers were great this morning. They beat on the top and the bottom line. Comparable store sales came in at 0.4%. That's after several months of decreases in same-store sales. They said they were seeing return demand from both professional contractors and DIYers. They did give some sort of conservative guidance, and perhaps this new tariff news has to do with that. Sales expected to be about 2.5% to 4.5% for the fiscal year, and then comp store sales anywhere from flat to 2%. But we'll be hearing more. As you know, it's the retail earnings parade week, so we'll start to hear more. I don't know that everyone's had time to digest the news and figure out the implications. But of course, we'll be hearing more about how companies might potentially deal with higher tariffs.
Of course, and you spoke on Home Depot, and they were just the latest retail giant to report earnings this morning. And we have TJX and Lowe's on deck. What else is sticking out to you across the sector so far?
Yeah, so how Home Depot goes, you typically expect to see the same from Lowe's, being a pure play competitor in the space. TJ Maxx is interesting, and then we've got another off-price retailer, Ross Stores, coming out next week. Those are two names that are able to shake off any sort of trade war or tariff turmoil because of the structure of their business, right? They are receiving items typically from department stores that have already had tariffs paid on them. So they don't have to worry about that as much, and they end up being kind of one of the darlings when we have one of these trade wars, because not only do they not have to pay those tariffs, but because they don't typically have to raise prices. And we know the consumer is very price conscious right now. They're looking for a bargain. That's where you go. You go to these off-price retailers to get that value. So they're already doing very well because of this value conscious consumer. Add to that, if their peers, if their other apparel names, other department stores have to raise price because of tariffs, TJ Maxx will likely come out as a winner. We're also waiting for Target on deck next week. Great results out of Walmart last week. We know they're kind of the golden child right now because they do offer that value. Target is on deck for a turnaround here, right? They've got new CEO Mike Fidelki at the helm as of February 1st. We'll hear the first comments from him this earnings season. Are they managing inventory levels better? Are they seeing more discretionary demand versus necessities? That's where Walmart always wins out, because 60% of their business is groceries. And we know that necessities have really been a focus for consumers these days. So we'll get a whole kind of landscape of the retail and really the overall health of the U.S. consumer here in the next couple of weeks.
And you mentioned Michael Fidelki taking the helm at Target. How do investors typically approach a company's earnings shortly after a new CEO takes over?
Yeah, look, investors, like I said, are looking for a turnaround here. They've started to implement some of these new plans, everything from inventory management to product mix to, lower prices, everyday value, sort of picking up on some of the trends that have made Walmart so popular these last couple of years. And so they're going to want to hear what's Michael Fidelki's strategy? How does he continue on as the company is sort of picking up and a little bit recovering? And how can we improve on some of these trends?
All right, and NVIDIA's earnings are due Wednesday after market close. You say it's arguably the most important day for tech. Why is that in our last moment together?
Well, we've already heard from all the hyperscalers, so Microsoft, Meta, Amazon, Alphabet. We know that they have plans to spend about $650 billion on building out their AI functions. And we want to see, is that still being funneled in through NVIDIA? We know that is a huge partner. Those are NVIDIA's 4 largest customers. So how is that money being spent? Is there still demand there? We want to hear on updates from the Blackwell GPUs, what demand looks like there. We heard from CEO Jensen Huang last quarter that the demand was off the charts, but there were rumors at the end of last year that there were some supply and delivery issues. So how has that worked out? Have they figured out how to keep up with the demand? They also said they had a backlog of $500 billion for these GPUs. And has that kept up? Are we seeing more demand? So that would really support the AI trade to get some answers there. We also want to hear about new revenue streams. CEO Jensen Huang has also talked about the move from generative AI, so the chatbots we're all familiar with, into agentic AI, so software that actually does tasks. And what does that do for ongoing demand for these types of chips? So again, this is always a blockbuster report. It kind of either confirms or denies what we've already heard from some of the AI buyers and those that are building out their data sets or data centers. And so we'll all be listening very intently to NVIDIA's report tomorrow.
All right, thank you, Christine Short, head of research at Wall Street Horizon.
Thank you so much. Great to be here.
Still to come, we continue to sharpen our focus on earnings as Easterly Government Properties CEO Daryl Crate will join me to explain why his firm is set up to deliver consistent growth year over year. Meanwhile, AI is not only changing the way companies operate, it's also contributing to name changes. The CEO of Alice told me what it went into its recent rebranding. And speaking of AI, iFit will be deploying a virtual trainer that will guide you through specific workouts. Its chief executive told me more about it at the recent ICR conference in Florida. You're going to want to hear what he had to say. Stick around.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
welcome back to NYSE Live. NYSE-listed Easterly Government Properties is focused on mission-critical facilities for the U.S. government, such as FBI regional offices. On Monday, the company reported its Q4 earnings, with CEO and President Darrell Crate saying in a statement that its strategy allows it to deliver, quote, consistent compounding growth year over year. Darrell Crate joins me now. Darrell, welcome to NYSE Live.
Oh, it's great to be here. Good to see you, Ashley.
So good to see you. What stands out to you most from this past quarter's performance?
Yeah, I mean, this last quarter was another quarter on the move for Easterly Government Properties. We delivered a 3% core FFO growth with our guidance for 26. This is the third year in a row that we're on track to do exactly that. That compares to an office sector that's growing just about 1%. So we do have extraordinary growth. And we're doing that in a very simple way, which is delivering on what we say we're going to do. We delivered one of the most modern labs to the FDA this last quarter. It's over a 200,000 square foot facility, and it enables them to do exactly what they do well, which is mission. And we're providing them Class A real estate that can, again, support that mission, because we are built to serve in that way.
All right, and how do the results from your Q4 earnings align with Easterly's long-term strategy?
Yeah, I mean, as we continue to bring our projects forward, we're very excited. We've got 3 other development projects. We've got a law enforcement facility in Florida with, again, a very long-term lease. We are moving forward with our 2 courthouse projects, one in Medford, Oregon, the other project in Flagstaff, Arizona. Again, all of these leases are 20-year plus leases. Today, our portfolio has just about 9.5 years worth of weighted average maturity in our leases that are backed by the full faith and credit of the U.S. government. And when we add those additional 20-year leases, when we talk next quarter, well, maybe the companies and our portfolio is 3 months older, but our weighted average maturity of our leases is going to continue to be higher. And that's the type of compounding growth that we're delivering with durable cash flows with the U.S. government.
All right, and the White House says it's focused on efficiency and modernizing how the government operates, and the General Services Administration is leaning more into leasing mission-critical facilities. How has this impacted Easterly?
Yeah, no, that's a great question. But what folks should understand is that efficiency equals public-private partnership. And this GSA, with its new administrator, who is recently approved by the Senate, Ed Force, is a commercial guy. He ran Cushman Wakefield, a very large real estate organization. He also had leadership positions at Goldman Sachs. So he understands how to run processes, and he understands that the government is great at mission. We can't go catch criminals, cartel members. We can't test the food. We can't do border control. But what we can do is manage real estate. So what he understands and where the GSA is going is understanding that they will focus on mission, and we will preserve the real estate to give them the best facilities to support their mission. One of the biggest problems in the U.S. government today is deferred maintenance, because Congress sporadically funds each of these agencies. And the first thing that they cut in their budget is repairing the roof or the other little deferred maintenance that you'd have. And today, that's over $80 billion of deferred maintenance in their portfolio. So we, being real estate managers each and every day, can make sure the walls are clean, the carpets are done, the roof is not leaking, the doors are working, so our government workers can focus on what they do best, which is serving the American people and accomplishing their mission.
All right, thank you, Darrell Crate, CEO and President of Easterly Government Properties.
Great to be with you, Ashley.
Coming up, we explore how a pair of companies are using AI in completely different ways to find success, including one firm implementing it to help people stay in shape. Those details are next.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. Earlier this year, Alice announced its rebrand from ActDefense as it looks to secure AI-powered interactions. In fact, the company says that it protects 3 billion people across social networks. I spoke with its CEO, Noam Short, about what else factored into the rebrand. Take a listen.
A few years ago, when AI became a thing and everybody started using it and building products based on it, our market just exploded. Our TAM massively increased. For us, it feels that it happened like almost overnight. And we understood that our branding, our name is no longer what we are actually is. So after a process of a lot of reflection and thinking about who we are, what are we for the market, what is the message that we want to send to everybody else, we thought about something new, something that is not dark, not cybery in what it says to everybody, is more like fun, more adventurous. This Alice, the Wonderland sphere, because everything can happen, bad things and great things. You can go into that door, you can go into that path, and we're helping our customers choose the right path so they can have the best adventure that they can have.
And you said you're solving huge problems for companies. What problems is Alice solving?
We're providing this security and safety and privacy layer on top of products that are being deployed in front of a lot of people. Think about the concept of communicative tech. When we talk with our machines, when we talk with our social networks, when we talk with enterprises using AI, there's a lot of bad things that could happen. And our company basically knows how bad looks like. Everything behind Alice is based on something we call the rabbit hole. Over almost a decade, we collected from the worst parts of the internet, the deep web, the dark web, samples of how bad content and behavior and illegal content, from money laundering to human trafficking, to malware, actually behaves. We created models that are able to detect that and stop that in real time. Now, on top of these things, we were able to convert that to protect AI models. And all of a sudden, this is what we do today.
All right. And for nearly a decade, you've been inside of that world of online harm and abuse. Have you seen patterns emerging before others have seen them? And what are they?
We constantly see the early signals of new trends that are threatening eventually the large population and the internet as a whole. So we're seeing new things happening, like one sign after another, and we can connect the dots to actually start with the fringe, start where threats just starting to happen, and translate that to protection at scale. So, for example, when we protect a chatbot for like a large pharmaceutical company, we actually know that somewhere online, a threat actor figured out a way to bypass their protections. And it happened once or twice, but we actually saw it happening. We were able to take those samples, even if it happened to one customer of ours, and deploy it to everybody else. So you don't need to see massive event, massive scale attack, and actually deploy that. It's enough that we saw it once, somewhere online, and immediately we're converting it into a large-scale protection that we give to our customers.
Would you say your technology is proactive rather than reactive? Yeah. And how important is it to get ahead of something before it spreads?
I don't believe you can get to that in any other way. Like if you want to be reactive and kind of like you see attacks happening all over the world and you're saying, okay, maybe it's time for us to protect ourselves as well, this is probably too late. You'll probably already be hacked, attacked. Also in AI, AI attacks are now not happening in a very noisy way. Like if your network was breached, it was either breached or not. And you know that it happened and data was stolen. When something happens with conversational tech with AI, it's not necessarily that obvious for everybody. It can hurt your brand, it can hurt your customers' privacy, it can slightly leak data that you don't want it to leak. It's not straightforward. So it's way more complicated to figure this out. You must be on top of the cutting edge of attacks, of the cutting edge of things that can happen. And the only way to do that is by proactive research, proactive search of things that are actually going wrong and converting that into a scaled solution that you can deploy on customers.
Thanks, Noam Schwartz, for that interview. In other news, last month's ICR conference in Florida focused on the latest consumer trends. Workout app iFit is experiencing a shift, which will include the rollout of an AI-powered personal trainer. Its CEO, Kevin Duffy, shared more details about his company's transformation. Check it out.
The first 30 years of the company's history was largely hardware, and then it really transitioned to software and content. A software system called iFit that runs across all kinds of different products. And then the last 3 years has been really AI related. We launched our AI coach in early 2024. And this year we're launching a personal training product called Taylor. We all know like fitness is about personalization, right? My goal might be different than your goal. You may want to run a real fast 5K, right? I might just want to lose 5 pounds, whatever it might be. AI and how we're using it is enabling us to personalize your workout plan very, very specifically to you.
Do you think the industry is going to fully have to adapt AI in order, to keep up?
I do. I just think, like, we all wish we had a personal trainer, right? An individual one, but it's very expensive. There's a massive amount of people who would benefit from having a very individual approach to their fitness, and AI allows that to happen. So I think it's really important to adopt.
And can you tell me a little bit more about the Ultra One and its launch and how it's been going?
Yeah, when I arrived in this industry, I came from the audio business, which was all about how do you make a beautiful speaker to be allowed to be in your living room. I got to this industry and I was like, oh gosh, a lot of these machines are in the garage. Why can't they be both beautiful and functional? And so Ultra One was about that. How do we engineer a beautiful treadmill that also belongs in your home, but is also really functional? So we launched that recently. It's doing really well.
What has customer feedback been, especially about the aesthetics?
People love the aesthetics, right? I mean, it comes in a beautiful maple. I don't know if you've seen it, but it's just a beautiful product. So the feedback's been really, really good.
What are your thoughts on the state of the fitness industry right now and going into 2026? Where do you think we're going to be going?
Well, I think first of all, it's growing. I mean, people's focus on health and wellness in general is rising. I think people are taking health in their own hands. We all used to rely on doctors and the pharmaceutical industry to take care of us. And I think that we've all realized it makes a lot more sense, especially with biometrics and be able to measure your own sleep and your nutrition and your heart rate, and all of that information is causing people to attempt to be a lot healthier. And exercise is such an important part of that. That I think it's a good time to be in the exercise business.
And can you talk about the move toward strength training or the focus on strength training and iFit, how you're meeting that customer demand?
Yeah, I mean, I think what we're learning is that a balanced approach is good. Heart health matters and being strong matters, especially as you age. Making sure you maintain your strength because it declines over time. At iFit, we're attempting to provide a holistic approach to fitness, whether or not you want to run or strength train or do Pilates or yoga or mindfulness, whatever it might be. The iFit platform provides all the content you need to on your health journey.
All right, and what is your hope for ICR this year?
You know, it's just great. I was here last year. I was here the year before. It's great to meet with all consumer investors. Had a meeting already before this just to learn about what they're seeing in the health industry. Helps create a knowledge base that I think I can apply for the company.
Do you think there's a benefit to being in person and collaborating with colleagues?
You know, I think there's a time for that, and there's a time you don't need it. Right? And I think a lot of the debate, the public debate, seems to make these things mutually exclusive when I don't think that's true. You know, I think a conference like this, being in person, is fantastic. I think when you're inventing, I think being together is fantastic. I don't think you have to be in person for everything either.
Thanks, iFit CEO Kevin Duffy, for that interview. Before we go, let's take one last look at the markets. We are about 30 minutes into trading. The Dow is up 0.6%. The S&P almost up 0.2%, and that's after President Trump's new 10% global tariffs went into effect earlier today, though the White House has threatened to raise those tariffs to 15%. And Wall Street looks to bounce back after the major indices each pulled back by more than 1% on Monday. An AI data intelligence platform, DDN, announced the appointment of Guido Torini as its CFO this morning. The company works with NVIDIA and NYSE-listed Ford says that this move comes at a pivotal moment as demand is rising for high-performance AI infrastructure and data platforms. In a statement, a CEO, Alex Buzzari, added, quote, Guido brings the financial leadership and operational rigor to strengthen our foundation and prepare DDN for our next phase of global growth. That's going to do it for our coverage today on NYSE Live. We covered everything from earnings to tariffs. We had Home Depot report early this morning. They were up almost 3% in pre-market trading. A lot more earnings. Remember, NVIDIA will be reporting on Wednesday. I'm Ashley Mastronardi. Have a great day.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?